And welcome back. It's Jason Walter here. I want to go over a brand new report from Realty.com for the month of January. What happened in January this year compared to last year, but more importantly, compared to pre-COVID levels going back all the way until 2017. I'm also going to be sharing how each of the metros or each of the different cities in the U.S. Fared as well, because there's some very big differences. Some states or some cities reporting decreases in home prices compared to 12 months ago, and also some cities reporting triple-digit increases of housing inventory. So I have a lot to share. Let's go ahead and dive right in. Again, this is a new report from Realtor.com, and this is based on data for January that was just posted on February 2nd here. It says the number of houses for sale is continuing to grow compared to last year at this time. So we have more houses listed for sale right now compared to January 2022. As time on the market slows, in other words, it's taking longer for houses to sell compared to 1 year ago. But having said that, housing inventory is still well below pre-pandemic levels. And it says here the decline in the median asking price growth rate has moderated, potentially signaling lower but stabilizing housing market activity. What this means, of course, is that asking prices on a year-over-year basis has still been increasing, but not at the same rate we saw compared to 1 year ago. So for home buyers, a slower pace of home sales and more houses to choose from is creating more opportunities. However, though, because prices and of course because rates are so much higher compared to 12 months ago, and especially compared to 2017 through 2019, we still have a housing affordability issue in the U.S. So let's talk a little bit more about housing inventory in the U.S., the number of houses for sale, because that has increased 65.5% this January compared to January of 2022. So there was approximately 248,000 more houses available to buy this past month compared to 1 year ago. So approximately 250,000 more houses to choose from compared to 12 months ago. However, having said that, housing inventory is down approximately 43% compared to 2017 through 2019. So in other words, even though we have far more houses for sale right now compared to last year, up by about 65.5%, we're still well below pre-pandemic levels. Now here's exactly what I mean by that. Here's inventory levels going back to 2017. This is a little bit hard to read here, but if you think that in 2022, we had more or less record low inventory levels in the US, there was less than 400,000 houses for sale back in January 2022. And this year, though, there's approximately 625,000, actually just under 626,000, and that's an increase of 65.5%. Also, when looking at inventory levels in 2021, we have more houses listed for sale compared to 2021. But actually well below pre-COVID levels. Here's 2017 in blue. The red line right here is 2019, and here's 2018. So 2017 through 2019, we had more than 1 million houses for sale, in the range of 1 million to just under 1.2 million houses for sale. Now we only have 625,000. One more thing I do want to mention regarding trends for housing inventory is that back in 2017 through 2019, inventory levels were very low in the winter months, but then picked up in the spring and summer months, and more or less peaked around July and August each year, and before falling once again once we approach the holidays. So that's entirely normal to see that seasonality for housing market, more houses for sale in the summer months, and of course far less in the winter months. Look at 2022 though, and this is one reason why we saw a decrease in home prices, down by about 11% since May last year. We reached more or less all-time record lows for inventory levels, at least lows going back to at least 2017. But we had very low inventory levels for the first 4 months of 2022. We reached all-time record highs for home prices back more or less in May and June of 2022. Look at this though, because in a normal year, we would have peak levels for inventory in July and August. But back in 2022, inventory levels increased all the way until we hit November, which is entirely abnormal, which is one main reason why home prices decreased so much over the last half last year. I also want to give you guys an update regarding pending home sales because according to Realtor.com, pending home sales decreased by 31.9% this January compared to January 2022. So a decrease of almost 32% on a year-over-year basis. This is actually a little bit lower than December's decline of 36.8%. So in December, we had a decrease of pendings down by about 37%, but this January, on a year-over-year basis, they declined by about 32%. So what they're seeing right here is that this could be a potential sign that our housing market is stabilizing, going to relatively low levels of home sales this year. But of course, a lot could change given the direction of inflation this year, as well as changes regarding mortgage rates as well. They also cite one of the reasons why we're seeing this decrease of contracts being signed between buyers and sellers is that for someone buying an average price home today versus 1 year ago, putting 80% or 20% down, I should say, that's going to cost them approximately $650 more per month compared to 1 year ago, or an increase in their average monthly housing payment of about 50%. And of course, this far outpaces rent growth at only a 3.2% growth rate on a year-over-year basis, and of course, inflation at 6.5%. And here's a chart showing pending listings going back to 2017. So this dot right here is for 2023, January 2023. There was 303,000 pending home sales in the U.S., which is actually a little bit higher than pre-COVID levels back in 2017 through 2019, but well below 2022, when at that time, in January 2022, there was approximately 450,000 pendings, and back in 2021, there was actually about 475,000. Now, here's something you guys should be aware of, is that even though we have approximately 32% fewer contracts being signed right now compared to 2022, look at 2022 compared to 2021. Because in January, it was actually very close regarding the levels of contracts being signed in the US. But that really peeled away, especially in May and April of 2022 compared to 2021. And ever since May of 2022, we saw this huge decrease of contracts being signed between buyers and sellers. And obviously that's due to the fact that rates increased so much in 2022. We started the year at approximately 3.3% and ended the year at approximately 6.5%. Realtor.com also provides some insights regarding new listings as well, because new listings in the US decreased by 5.4% compared to 12 months ago. So we're seeing this lack of houses being listed for sale because, of course, people don't want to give up their historically low rates. However, having said that, though, this 5.4% decrease compared to 12 months ago is actually a lot lower than the lows we saw back in November. Look at this, November, we saw a 17.2% decrease of new listings. In December, we saw a 21% decrease of new listings. So the gap over the past 12 months is actually narrowing, which would imply that new listings potentially may be increasing. And here's a good way to describe that. Last month, there was approximately 318,000 new listings in the US, which is actually very close to 2022, only down by 5.4%. Look at 2022 though. We saw a huge gap in the number of new listings last year compared to years past, especially in August 2022. A big difference between the number of houses being listed for sale. But as we got into the winter months, though, the gap between 2022 to years past actually narrowed. So we're still seeing a decrease on a year-over-year basis regarding new listings, but the gap between the last 12 months is actually narrowing. And if we actually get into an environment where new listings start increasing greatly, that's going to cause housing inventory to increase as well, which of course will put more downward pressure on home prices. Also, in regards to housing inventory, they note the number of houses for sale in 50 of the largest metros in the US has increased by 87% compared to last year. This is obviously more than the national average because if you guys recall, housing inventory on a national level increased by 65.5%. Compared to the 87% increase for the 50 largest metros in the US. And in fact, in the South, that had the biggest growth rate of housing inventory, increasing a whopping 125.3% compared to last January. In the West, we saw a 114% increase. The Midwest and the Northeast had a much lower gain of housing inventory of 36.2% and 23.3% respectively. So in other words, we're seeing a big increase of housing inventory in the South as well as the West, but not nearly as much in the Midwest and also the Northeast. Also, check this out. Inventory increased in 49 of the 50 largest metros in the US compared to 1 year ago. So metros which saw the biggest increase of housing inventory, or the number of houses for sale: Nashville. We have approximately 303.5% more houses listed for sale this January compared to January 2022. Austin also saw a huge increase of 260.4%, and Raleigh, North Carolina, an increase of 254%. The only metro in the US that saw inventory decreases on a year-over-year basis was actually in Hartford, Connecticut, decreasing by 8%. Meanwhile, the typical home spent 75 days on the market this January, which is 13 days longer compared to January 2022. So the house is taking approximately 2 weeks longer to sell compared to 12 months ago. They also say here at the 50 largest metros, 45 metros recorded an increase of days on the market compared to the previous year. So 45 of the 50 largest metros it's taking longer for houses to sell compared to 12 months ago. So time in the market increased the most in Raleigh, North Carolina, an increase of 41 days longer to sell a house compared to 12 months ago. Las Vegas, a gain of 40 days, and Denver also increasing by 40 days. On top of that, or I should say in contrast, there's only 3 markets that actually recorded decreases of days in the market. In other words, houses selling faster compared to last year. Richmond, Virginia, a decrease of 20 days. So houses are selling approximately 20 days faster compared to 12 months ago. Milwaukee, a decrease of 8 days, and Buffalo, New York, decreasing by 3 days from 12 months ago. Let's also talk about home prices nationwide, because asking prices remained flat in January compared to December. So the median asking price was approximately $400,000 in December as well as January this year. However, of course, it's been on a downward trend ever since the all-time record highs that we saw back in June at $449,000. And that equates to an 11.1% decrease of asking prices since June of last year. And here's a chart showing the median asking price in the US going back to 2017. I'll see this is 2017 all the way until 2022, and here's January 2023. So look at pre-COVID. So 2017, 18, and 19, we saw an increase of asking prices until more or less May and June of each year. And after that, a slight slough off each year. Look at 2022. More or less going straight up until we hit June, and then more or less going straight down for the second half of the year. Entirely abnormal, especially compared to pre-COVID levels. But right now, on a year-over-year basis, asking prices are up by 8.1%, which is obviously much less than the gains we've had back in the spring and summer months of 2022 compared to 2021. So here's a table showing what happened this January in the 50 largest metros, and also this is by each of the 4 major regions as well. So active listings, or the number of houses for sale, giant increases in the South and the West, and not as big of an increase in the Midwest and the Northeast. Regarding new listings, a giant decrease of new listings, down by about 21% in the West, and 11.5% decrease in the Midwest. And in contrast, though, a 5.4% increase in the South. Again, that's for new listings. Asking prices, look at that. The West, more or less flat compared to 1 year ago, whereas the Midwest, an increase of 12.8%. Some big differences there. Regarding days in the market, it's taking approximately 27 days longer to sell a house in the West compared to 12 months ago, where it's only taken approximately 6 or 7 days longer in the Midwest and the Northeast. And here's another summary I actually really like. I haven't really seen a summary like this before. This is looking at January 2023 compared to 2017 through 2019 for 50 of the largest metros. So comparing this January to more or less pre-COVID levels. So for active listings, in other words, housing inventory, we saw decreases of houses for sale this January compared to pre-COVID levels. The biggest decrease was actually in the Midwest, down by 38.2%, whereas we only saw a 16% decrease in the West regarding active listing inventory. In regards to new listings, we also saw decreases as well by double digits, and also the biggest decrease was actually in the West, down by about 33%. Also regarding asking prices compared to 2017 through 2019, the biggest increase was actually in the Midwest, in the South, an increase of 43.2%, and following closely behind was actually in the Midwest, an increase of 41.8%. But all four major regions are recording increases of asking prices by more than 30% compared to pre-COVID levels. Here's something I kind of found interesting as well, because they actually looked at days in the market as well. Look at the Midwest and the Northeast. The Midwest, houses are selling 14 days faster compared to pre-COVID levels. In the Northeast, 18 days faster. In the South, selling about 6 days faster. But in contrast though, look at the West. It's taking approximately 12 days longer to sell a house this January compared to pre-COVID. Here's also a summary regarding the 50 largest metros in the US, because there's some very big differences here. So let's first talk about asking prices. I'm going to be kind of covering the cities in which asking prices have increased the most compared to 1 year ago, and the cities in which asking prices have decreased the most compared to 12 months ago. So Austin, Texas, a decrease of 3.3% in the median asking price home compared to 1 year ago. Boston, a decrease of 4.4%. Chicago, down by 2.1%. Denver, down 8% compared to 12 months ago. That's actually one of the biggest decreases in the U.S. right now. Also in Los Angeles, decrease of 3%, whereas Kansas City, Missouri, an increase of 10.4%. Memphis, Tennessee, a giant increase of almost 20% from 12 months ago. Milwaukee, Wisconsin, a gain of 22.3%, whereas in New Orleans, a decrease of 4.1%. Asking prices also fell in Pittsburgh, Pennsylvania, down by 4.4%. Relatively flat in Raleigh, North Carolina, despite the fact that inventory is up by 254.8%. Sacramento, California, asking prices decreased by 4.2%, an increase of 82.6% in the number of houses for sale. San Francisco, down by 3.9% for asking prices. San Jose, a decrease of 1%, and Washington, D.C., declining by 2.5%. In regards to housing inventory, look at this. Austin, Texas, an increase of 260.4%. Charlotte, North Carolina, increasing by 130%. Dallas, up by almost 200%. Denver, up by 163%. Jacksonville, Florida, 149% increase in the number of houses for sale. I mean, this is astonishing to see triple-digit gains of housing inventory amongst many of these metros here. Las Vegas going up by 118%. Memphis, Tennessee, an increase of 122%. Gains also in Nashville, 303%. New Orleans, 109%. Oklahoma City, 101%. Orlando, Florida, a gain of almost 145%. Phoenix, Arizona, almost a gain of 200%. Portland, Oregon, 107.2% increase compared to 12 months ago. Raleigh, North Carolina, again up by 255%. Riverside, gaining by 124%. And also in San Antonio, Texas, a lot of people ask about that city, gaining by 105%, asking prices only up by 1.6%. We also saw giant increases of housing inventory in Seattle, up by 181%, and asking prices relatively flat compared to 1 year ago. And also in the greater Tampa area of Florida, an increase of 209% in the number of houses for sale, and asking prices up by 4.1%. And with that said, please comment below with your biggest takeaways from today's video. Also, if you guys got any value to this video whatsoever, then please hit the like button. I would appreciate that. Of course, I appreciate you. Hope you guys have an awesome day, and I look forward to seeing you on the next video.